7. Thank you for tuning. Have with us today Bryan Johnson. Bryan, please say hi to the people.
Hello, everyone. How are you? Hope you're having a good day today.
Excellent. Always a perfect day. Now, I'm really excited about this. You should be really excited about this conversation. The community should be really excited about this conversation. We have the honor of being with the 2008 World Cup of Stock Market Championship of Stock Trading winner. And he placed very well in 2009, second place as well. Bryan, first of all, let's just start off and tell us a little bit about the World Cup of Stock Market Trading Championship, what that is. Give us a little story about how you wound up there and what it was like to win in 2008.
Well, I had discovered a way of calling bear markets in 2005, and I didn't formalize it until I joined the Cup in 2008. It was a very interesting discovery, and I kept track of it, seeing how well it did. And so in 2008, I was able to use it in September, and I called the crash. And the ideas behind it is that the market stalls out and the internals start falling apart. It's a matter of measuring it mathematically. So that's what I did. And on September 4th, I got a sell everything type of signal, and I sold the next day and watched the market collapse. And it was a good feeling to know that I was out, but not a good feeling to know that people were getting hurt in the market. So, but I was up 48% that year. It was a good outing, and it was a nice feeling to have won, to call a crash, and to win a World Cup in the same year.
Amazing. That's a great talent, and you did it with tools that you kind of pioneered in some way, shape, or form, and methodologies that you kind of created. Because when you look over your material, you say, one thing that they don't teach this stuff. So you have a company, Moon Run, right? You call it the Moon Run Report. It helps a lot of people. Tell us how the Moon Run system can help the average American investor navigate the stock market, especially during uncertain times like corrections or bear markets.
It's a matter of being able to play defense in the stock market. What happens if a football team doesn't put their defense on the field when the opposing team's offense is on the field? Well, they're just going to get clobbered, and every now and then there's serious reckoning in the stock market. You have to know when to be out. But the main point is to be in and have confidence that the market's rising. So that's what I was able to accomplish, to know that the market's strong enough to be in. A lot of people say, well, the market's too high, I think we'll come out, and they miss out on maybe 20, 30% advance in the market. Give up on the market instead of having tools to know when to come out. Okay, and that's what I do. I have 4 different ways of identifying when I should come out. One is the tsunami indicator, which I used in 2008. And then there are 3 others that I was able to identify. The 50 new lows rule, which means that the number of new lows is too high at the top of the market. The accelerating new lows is when its market is plummeting, and then the shortable correction, which handles everything else. And it's a matter of analyzing the new lows in the stock market. That's what I did. I consider new highs to be fluff and not able to analyze, but the new lows is where it's at. That's what I determined.
Awesome. So we see the value of that on the personal / individual level, the Moon Run Report.
Yeah.
How could the Moon Run system or similar tools be utilized to support local businesses and promote economic stability within the community? I know you just explained it in the general. Let's focus on the business and economic stability within the community. There's value there for them too, right?
Well, if there is a recession that follows with the bear market, people might want to curtail adding inventory to their stock if they're a business, so that they're not overloaded and they know that things might be coming a little tight and stuff. Instead of having a lot of things on the shelf that aren't going to sell, they can just make sure that they can cut back, and then when things are brighter, to start ordering things again. It's a matter of knowing the economy in a way that the stock market functions. But as far as I'm concerned, the economy and the um, stock market are two different animals. Okay. And in 2022, actually, the economy was good. And the stock market fell apart because the bond bubble burst. Okay. That was happened. Bonds were too high. They came down. Interest rates spiked. And so we had a different situation. But you know, uh, even so, I'm sure some companies felt the pain of having their stock go down. So that's what it was.
Awesome. So, in simple terms, you mentioned this thing called a DCAM timer
Yeah.
for in your presentation, and how can it assist regular investors in managing their portfolios?
Okay, if they have a stock that's rising and on a weekly basis, looking at the DCAM timer, basically the DCAM timer is a tool that allows you to know when to sell. Okay, and maybe they're tracking this thing. It is able to know when the stock is topped out, and you don't know when to get rid of it. So the DCAM timer is basically composed of three things: a simple moving average, a double moving average crossover, and a stochastic reading. So you probably need a tool that was able to combine those three and show when a buy or sell signal is coming in. But these are professional tools, and I know the average person, if they just pick up a stock and they have that type of thing, looking at their stock on a chart, maybe they can't put the DCAM timer together. But it is a tool that if you have professional uh, platforms, you can do that. So I use it with my own website, and the DCAM timer would be interesting to have on a like something like stockcharts.com, where you can just pull it up and get the reading. So, anyways, that's is part of the system that I've developed and useful for people to if they want to sell a stock.
Awesome. So you had this book, Before the Bear Strikes, that you authored and then updated with a second edition.
Hmm.
What actually motivated you to actually give the community this high value?
Well, I wanted to organize my thoughts. The book was what in 2018 had some problems with it. The accelerating new lows and the shortable corrections the models were not right. And in 2022, I came up with a second edition, and they corrected that and took out and put in things that were necessary for using my system. So uh, the book contains all the math that I've designed for the uh, system, and anybody can reconstruct my methods and use the calculations to run the moon run system. However, it would take some time, and updating it what might be beyond people's abilities. So I have my own website, themoonrunreport.com, which does it all.
Awesome. So with that being said, we know that how it can help the individuals. We know how it can help businesses. It seems like it may even be able to help um, on a level above that, maybe governmental, maybe community on local government levels, because considering the emphasis on risk management and timing, you know, you're developing or you're sharing what one may call, principles that can be adapted to create investment strategies that support potentially sustainable initiatives such as clean energy or environmentally friendly projects within the community. How realistic is it that we could utilize the technology that you have in your books to actually make safer or reduce the risk in funding such projects, clean energy, sustainable communities, etc., from your perspective?
Well, I'm not sure. I'm in the markets to make money, uh, and community benefits is actually so that people don't get wiped out in the market. That's the thing. If you have a risky investment and you want to come out, that's basically it. Uh, as for with it might be of interest to be able to chart these industries with DCAM and know when to come out. That might be of some help. But as for a higher purpose in life, we're here to make money, and that's basically it. And I have no contacts with government or environmental groups, but that's the idea behind the book.
Yeah, because this is a great strategy because, like, look at it like this: a company gets funding, and if they have a deliverable in their analysis of what they're going to do with the said funding, maybe they're getting a loan, maybe they're getting a grant, and you can say, we're going to utilize 50% as just capital to have on hand to put into an investment situation. Well, you're averaging 20% return for like the last 2 decades, right? So if you look at it as a company being put in position or a local community, local government level, putting aside a set amount of money where the 20% that's going to be not guaranteed, nothing in life is guaranteed, but highly achievable based on your system and your book. This is why all business owners should get it, even some of the politicians and people on that level, because if you can manage successfully 20% return, now we know what the destination is, Simon Sinek, to agree upon, to put into escrow or into the situation where the 20% yield would then pay for the sustainable community projects. Or for like a business, it would make it sustainable even during rough periods because they have that capital investment in the right spot. So with that 20% average being a good target, now that we see that, how can new investors with limited experience use tools like the PEP indicator and the tsunami indicator that you mentioned, um, to aim and achieve this target that you do on a regular basis?
Basically, if a company is expanding, they may want to wait. If there's a bear market coming up, they may want to wait until investors are more amenable towards the market. The PEP indicator, when it flashes the buy signal and the time to get in, it's But yeah, usually when the market starts getting going, that's when you want to be expanding. And if you're faced with a bear market situation, people might want to say, well, let's not borrow, let's not go out on a limb here. We might get crushed and the company might fold. That's the thing, And so in 2008, it took a while for the market to come down and kind of bounce around. And then in 2009, it went even lower, and these things are that you have to wait for the market to be better and people more amenable to selling to put more assets into their company. So market timing is important, I think, to know when the market's strong, when it's weak, and when it's going to turn around. It's a matter of part of the business cycle and knowing when to expand and when not to.
Here's a graph from your content
Yeah.
from 2008. Walk us through some of the value information here in Discovery for people.
Okay. This happened in the end of 2008. There was a time when it turned around, and you see those blue arrows on the right saying, "Oh boy, this might be a time to get in." But by golly, what happened is that the PEP indicator was not strong enough for the market to rally and go higher at that time. And then when the red arrows started, it was a time to actually sell and get out. And then following the blue arrow on the right hand, lower right, shows that when at that time the PEP indicator was flashing a green arrow and a time to get in. So the PEP indicator is a very useful tool to know when the market is strong enough to get in and when it's time to just kind of lay back and wait for the market to correct itself and then get back in.
Okay, awesome. Now, with that said, we're in. I have here your 2021 to 2023.
Yeah.
Talk us through this as we're just now coming into 2024, and kind of, not to say give away the secrets or anything, but kind of give us a high level overview of what this trajectory means for 2024 based on your opinion and how they can contact you for more information.
Well, my book is public domain. The Moonrunner system is public domain. Anybody can take the book and apply the formulas, and there's nothing that I want to hide from anybody. It's just that the process of going through and tracking the market every day might be beyond everybody's abilities or their time and effort, that type of thing. So in 2021, the market topped out because of the bond bubble bursting and also the money situation from COVID. They flooded the market with money, and then they decided to retract, and that's what happened. As we went through this down period, there were times to be in, times to be out, that type of thing. So my system was the shortable correction call, which flashed most of the declines in this market. In fact, nearly all of them was corrected in May, and I was able to call all the rest of the declines in the market after that. So anyways, when it starts down, you got to realize is the bounce is coming strong enough to get back in. And sometimes there was a few times to buy and then to get out, take a little bit of gain, maybe 2 or 3%, that type of thing. It wasn't all of that great of an investment when you went back in. But so the market bottomed in October. This very much of a hiccup in the market type of thing. There are some sectors that were strong enough to be in during the whole year. I didn't get hurt too bad because I picked some of the better stocks out there. So in October, then we went into another period in 2023 where the market rallied, and the PEP indicator did tell us to get back in at that time. So in 2024, we are now after a fairly substantial rally starting in November of 2023, and we're correcting right now just a tad. I expect to be going back up again. The oscillators are turning around, and it looks like a good time to be in. So it's time to be defensive in 2022, and it's just a matter of knowing when to be in.
Right. Awesome. I appreciate that. And you made a great point about, people may not have the time to really get a hold of this concepts, study, get familiar with it so they can execute properly. And that's where you mentioned the importance of independent study and modifying like maybe one's own existing simulations and to generate the best ideas, right? So you gotta study, you gotta trial and error, and where you add value is that you have decades of experience. And I mean, hey, the world champion, you placed, you even finished another time in second place, and I think one other time you placed as well on their charts. So how important is it for the person just to commit the dedication and or to reach out to you and become a member of the Moon Run Report on moonrun.com?
Well, Moon Run Report is the first month is free. Take a look for free. Take a look around the website and see if you like it. And then after the first month, it's $10 a month subscription fee. I don't think I'm charging too much on that. So, but it gives very interesting information every week. And I've been able to put together a model of several different portfolios. I just don't have one portfolio. I have about seven. So that's what I do: a small cap, mid cap, minor cap, large cap, FANG stocks, timing, long and short indexes, and also some ETFs, gold bonds, dollar, and some other things. So that's what I have right there. But I believe it provides value because I'm being tracked by a service called Holbert Ratings, which rates top quality newsletters out there. And by April of this year to 2024, I will have a 3-year track record. I was up 15% last year. I didn't break the bank. I didn't beat the averages, but actually I had a gain. It was a tough year. And this year, I hope to be doing very well. So we'll see.
Yeah, matter of fact, now that you mentioned that, right? Let's go to showcase how good you really are to someone that may or may not um understand, right? Hold on one second here. This was what it looked like 2008, right? So there was a huge crash, and
Yeah.
maybe even this might not even be the best one to show. Is the other one the better one to show for the 2008 crash? Is this one better? Yeah, it's got a lot of red. Anyway, look, let's use this one because it's got a lot of red on there. It signifies. So there was a massive decline. Now, you were able, as bad as this year was, you won that year with what, 48% gains?
Yes, it was 47.99. And the clue to this market was that uh, the tsunami indicator worked. Okay, it had a fairly good track record, the tsunami indicator, and this system has been back tested to 1987, and of course, I identified that crash and several others in the 80s, the 90s, and but putting it all together, the four different ways of calling a bear market and the PIP indicator validating a buy signal, those are components that have proven test time over time. I tracked this from 2006 when I started keeping track record for the tsunami indicator. And so it's a matter of putting it all together, having a system, trading it, being successful. And I am doing 20.28% a year since 2008. That is September 2008, which doesn't even include my uh, uh, performance in the World Cup. So that's what I did.
Man, that is amazing. Like I said, I just wanted to reiterate that because in the middle of like one of the worst years on documented history, you gained 48%, and that's what led you to winning. So put it all together for the average American. How can the average American who may not have the extensive financial knowledge benefit from your experience and apply it to their own investment strategy? If you had to give them a high level overview, we know we talked about it in detail, but give them the high level overview of how they're going to benefit from your experience.
Well, I would suggest they subscribe to my website and take a look at the portfolios which are running right now. They've done very well since November, and hopefully they'll continue to do well. There are 7 different ways of investing, so that it provides a variety of ways people might find confidence in buying stocks. Okay, I have those various portfolios that I suggested, but also to have the confidence to stay in the market. That's the thing. That's where the big money is made, and to know when as the market goes higher and higher, I get these minor buy signals and minor sell signals, minor buy, minor sell, all the way up to the top, and then I have a massive sell signal, and then we come out. So it's a matter of just working the system, uh, trusting that yeah, the bear market system will work, and that to invest the correct way that I feel is right for the market at that time. These are all developed. These portfolios are developed with a professional platform, Portfolio 123. I have worked on them for many years, and they are very stable and have provided substantially outperforming the index by quite a bit. So take a look and see, and if it's right for you, maybe you'll be in happy to join the Moon Run Report.
Yeah, absolutely. And one last question here. How can, from your vantage point, what would be the value added if we could install or instill this mindset and mentality in our community leaders and members alike for, adaptability purposes, like you said, the resilience to stay in the market or stay in the game, even during the face economic challenges or shifts in the market, because we have a www on the horizon that may pop off, may affect the markets, things may happen. What how would you present this to community leaders, political level or local level, like in the actual community itself?
Well, I promote prudence in financial matters. I do not go on margin. I do not take risky bets, and I play defense. I mean, those are to make sure when you invest, you don't want to go out on a limb and just ruin your finance. Uh, that can lead to if someone loses all their money in the market. I mean, that can lead to bad family situations. People get divorced over money. Is prudence and don't stick your neck out too far. You can achieve good results without getting toasted in the market. It can be done. It can be done, and defense in the market is of course very imperative. And as for community leaders, to have a heads up, on what direction the market is going. And overall, it's a good system. It gives me confidence to stay in the market and be able to work the market the right way, and not have take on risky assets that would just provide tumult in people's family affairs and their finances. That's what it is.
Bryan, I think you make an excellent, a superb point there, multiples. I mean, this book, this information, this knowledge, networking with you, getting on your website, it could save your family, keep your family together, prevent the divorce. So after a financial collapse, that's good for the community. That's good for future generations. You're going to help them achieve good results um, consecutively, consistently. If applied properly, it could, in theory, like you said, you're averaging 15 to 20% per year returns. That means, if we, instead of putting out, saying the bridge is going to cost X amount of dollars, let's pay that out now. Maybe the community would see the value of putting the money up front that it would take to pay for the bridge. If 20% of the is what we're getting, we could have it in 5 years, but it'll be free, kind of, sort of, because we wouldn't have spent the money. We would have invested the money as a community. It would have made the total amount that we need, so we could actually fund community projects intelligently, as the money pays for itself, currency pays for itself. So I think there's a lot more value with the book, Before the Bear Strikes, with your programs at Moon Run Report, than even the average person would consider. So definitely, I appreciate your time today. What are your closing remarks for the people?
Well, high returns can be done with taking less risk, or even just above average returns. The problem with the market is knowing when to take the risk. And I was never a successful investor until I figured out bear markets. I would never was. These A guy like Warren Buffett and many people can sit through a bear market and be able to ride out the storm. But me, I don't like doing that. I really don't. Uh, I am risk averse, and I do not. I want to be in the market when the sun is shining instead of rain clouds, and being able to negotiate the market in a way that I like. Having an intelligent and stable effort towards the market instead of just saying, "Well, just take a flyer and see what happens." I don't like that.
Mhm.
There is a method to the madness, and I've been able to capture the gains from it.
Awesome. Now I know I'd asked you for closing remarks, but you reminded me of one point that I thought was fascinating and crucial to showcasing the added value because you can go back to some of the videos I have here on YNet 7 and you can see me predicting stock moves down to the penny within like a day to a week ahead of time using the Fibonacci sequence. And when I was talking to you about that, you specifically said yours is different from Fibonacci and everything. Can you just explain the difference between as you explained it to me so the people can understand the added value there too?
Well, Fibonacci relies on a mathematical way of looking at the market that I have never been able to master. I want to master the stock market is where you want to be, and to be able to ride out the storm without being able to sell before the collapse in the market. So Fibonacci is just a different way of looking at the market. I have never mastered it. I don't know if it works or not, but my expertise, which is where I want to be and have been successful, that's the idea. If you can be successful doing Fibonacci, more power to you. I have been able to look at the market the way I have, and being able to, be successful in a way that my angle of observance is been proved. So that's what it is. There are
Yeah,
many different ways of investing in the market. I just happen to master this way, and that's where I'm coming from. And you have to have some expertise in what you're doing, so you can prove that you're making money.
absolutely. I think the way you explained it to me was it was more of a I think you said something like the mathematical principles and stuff, right?
Mhm.
So I thought that was excellent as a alternative, as a because the thing is everything ain't for everybody. So granted, maybe the Fibonacci is or isn't super accurate. Maybe the Fibonacci is or isn't for everybody to wrap their mind around. However, using in conjunction with or using yours may be better for another person to have extreme success or success over time that wouldn't have found it in another methodology.
Okay.
So that's why I wanted you to point out the difference because it's value added in conjunction and it's value added for people that may be able to comprehend and actually be better at your system than they will with other systems, whether it's Fibonacci or anything else that's on the market and out there.
Okay. Fair enough. Well said. So it's a matter of mastering what you've been able to do. Some people can invest one way or another. There's some outstanding investors out there, and they know how to negotiate the markets. They've been able to do it. So I have an idea. I published a book. I have success. Being able to explain to people how it all works. That's the clue. Just to be able to know that you've been successful and know how to repeat that success. Okay, you want to be able to come through with profits and know when to sell and when to buy. So uh, as time progresses, things should work out, and we still have a good future. Okay. Well,
All
thank you
right.
very much for this interview and presentation, and
Yeah,
very
yeah.
happy to do it.
I appreciate your time today. Pasha Paroh, White and 7. Brian, say bye.
Bye bye.
Always the perfect day. Thank you for tuning. Enjoy.